One of the big mainstream cons out there at the moment, which the public are blissfully unaware of, are financial independence groups. They're everywhere on LinkedIn and Facebook. They heavily promote to people that in order to become financially independent, you just need to keep on contributing to your pension and invest in tracker funds, etc. This mainstream thinking has really taken off in recent years due to books from Tony Robbins and the like. But they're doing a massive disservice for the people in these groups searching for financial independence or freedom. Why? Because no one ever got rich or even financially free in a time-efficient manner from parking money in pensions and trackers. Mainstream pundits are propagating this con message because it ultimately transfers wealth from the uninformed to the financial controllers, as in the fund managers. These conventional assets only work if you park your funds in for multiple decades. Put it this way, let's say you were fortunate enough to park £10,000 in a typical tracker fund, and that you luckily made 6% per year every year without fail. After 30 years, you'll only have £57,434, or after 40 years, £102,857. And that's before taxes and fees. And who knows how bad inflation will be after that period. Your pound or dollar most likely won't buy you as much. Also, let's use that higher number and say that you're now 70 years old, been saving for 40 years, and now have £102,857. Due to progression of medicine and genetics, it's highly probable that you'll live to at least 100 years old. So your nest egg has to care for you for another 30 years. That's just £286 per month. It's pretty grim. Sure, it doesn't hurt to have a tiny automatic contribution to a pension, so that by the time you're 70 you may potentially have a comfy retirement, but everyone always ignores real inflation, macro factors, and that there's on average a global market crash every 8.6 years, which sometimes eradicates the previous decade of gains. For example, this Vanguard UK tracker had all of its gains eroded by the recent tumble. Another cheeky thing is that most providers will only show you the last 5 years of returns for a particular fund. The reason for that is that most banks and institutions quietly run countless funds simultaneously and then advertise the successful ones after 5 years, whilst winding down the poor performers. Also, they will show you returns from 2009 onwards, the all-time low after the 2008 crash, but rarely ever before the crash. But even if you look at one of the biggest and most established funds like the BlackRock iShares Core S&P 500 fund, it's only 116.2% ROI over 20 years. That's just 5.81% per year. So, don't be misled. They are not financial independence tools. They're simply tools to make fund managers filthily rich, as these funds make between 0.1 to 1.5% per year based on their assets under management. So if a tracker fund has $50 billion in AUM and they have a 0.2% annual fee, that makes £100 million per year profit for not actually doing much. And there's the ever-present tail risk of that fund going bust. So if you are actually seeking financial independence within a time-efficient manner, 5 to 15 years, then you need to apply a first principles thinking analysis, and you'll quickly see that over the last couple thousand years, it's always been business owners that have made the riches. Even if you don't want much and just want a £2,000 per month residual income stream, tracker funds still won't cut the mustard. It's still business. For those that are actively seeking financial independence or freedom, the worst instruments, in my humble opinion, are the workplace pensions. People fixate on the wrong thing. They think that the employer matching contributions is great and free money, but everyone ignores opportunity cost. For example, I've seen many friends pay around £250 per month into their workplace pension. And yes, it may seem appealing that their work is also matching that. But instead, imagine your innate potential and what you could achieve if you spent £250 per month on your own mind and skills and knowledge set, with the aim of setting up, running, growing and selling a business. Even if you failed miserably, for 3 years straight like I did and wasted £9,000 or £10,000 of your monthly self-investment, and your first 9 business projects bombed, but number 10 was the lucky one, you'll put yourself light years ahead of someone identical who didn't go down that journey. Then you'll have the added benefit of being able to control your income and what you do. Don't get me wrong, it's a ridiculously stressful path and you'll work a lot harder than your peers for a lot less income for a few years, but it's so worth it. So going back to the point of the post, you need to do congruent actions in order to hit your desired goals. If you want an easy life and can't be asked about financial independence, then yeah, sure, dump your earnings or funds in a tracker fund and be done with it. Business and active investing isn't for everyone. But if you want more, then conventional assets are totally incongruent and a duff vehicle to get you there. And there's mountains of undeniable empirical data backing this. If you want a helping hand in setting up your first part-time online-based business, just head over to www.thewap.org/idea to profit.